tonight we will be hearing from the Department of Finance, and we will start with the City Treasurer, Margaret Lanier.
Thank you. Welcome, everyone. Thank you for coming out this evening. Welcome to the session called Dollars and Cents. And it's not only the Department of Finance, but it's also the Office of Budget Management. At one point in time, as I was explaining earlier, that the Department of Finance and Budget was one department. But with the new administration now, it's separated because there is a lot that goes on and it does need two separate directors. So right now with me, I have staff today. I have Aaron Pickett, who's one of my finance administrators, and also Bob Zilch, who is an investigator for our department. Also for the budget office, I have Rhea Price, and she'll be speaking a little bit about the budget, and she's assistant director of the budget office. So we're going to start off by giving you just a little overview of the finance department, and then I'll have Rhea give an overview on the budget department, how the budget works, the operating budget, where the money goes to, which I think will be very interesting. And then later on in the presentation, we'll get into some of the taxes that we have that I think will be pretty interesting for everybody. And then we'll break out into a session where we're going to have you, do some work and maybe, figure out where all this money's going to or where we can get money from. And that's usually pretty interesting for everyone. So, and it gives you a little idea of what they have to go through in the budget to try to, spread some of the money around the city. So we're going to do that later on. And then we're going to talk a little bit about some of the tax programs that we have. So with that said and done, I'm going to just, explain to you a little bit about our department. We have actually 3 divisions. And those divisions is our administrative division, which is our financial control, investment of funds, and our citywide allocation studies and our audits. We have our cashier area on the first floor. And in that area, we have our cashiers, we have our investment officers, we have our finance administrators. They're usually responsible for, the investment officer does daily wires. We collect for the school district, we collect sometime money from the URA. They're responsible for transferring all this money around in the wires. And they're actually responsible for all the city's money. So we get a daily cash report daily telling us how much is in the bank. Myself, the director, and a few other administrators in the department. But that's in our financial control. We also have the finance administrator, like Aaron's position. They're doing bank reconciliations and any other special projects that are signed. They do a lot with the property assessment. Then we have internal auditors who do a lot of bank reconciliations or one internal auditor deals with bankruptcy claims. So we have a pretty widespread department. We also have our tax billing and collection department. Also on the first floor is the real estate division. This is the division that sends out the yearly property tax bills. We also issue the tax relief, abatements, senior tax relief, and the library tax. We're also responsible for collecting the library tax. Library tax was a tax that was enacted several years ago. It was part of a referendum on the voting ballot. And now there's a percentage that we collect on our real estate taxes that goes strictly to the library to help cover some of the library costs. We also have properties for sale. The city has inventory of probably over 10,000 properties. And I know that may sound like a lot, but a lot of it is junk. We may have maybe 2,000 structures, if that. But a lot of properties that are housed in the 3 taxing bodies inventory may be where you live? Mount Washington, that's what it is. Where the incline goes up. All that hillside, city property. Greenways. Sometimes you see these pieces of land where they have flowers and so forth built on it. City property. So there's a lot of city property out there that's, it's just city property, city buildings. Another thing is our data entry. As payments come in, we have a section called our data entry that's responsible for applying all the payments. We get information from the bank that comes, payments go to the lockbox. The bank sends us a report where they have to process those payments to make sure they hit the right accounts so everybody's taxes can be paid. That's part of our billing and collection. We also have our collection and compliance, which is one of our larger divisions, and that's our self-assessed tax area. And the self-assessed tax area deals more with business taxes, parking taxes, amusement taxes, payroll expense taxes. And Bob's one of the investigators in that division, and I'm going to let him speak later on a little bit about those taxes. And then we have our cash flow and debt management, which is the pension trust fund, which our finance director is the executive director of our pension fund. And we're responsible for debt payment and so forth through that division. So that's just a brief overview on the finance department. I'm going to turn it over to Rhea Price, and she's going to be up here for a little while and just walk you through some of the things that goes on in budget. And I think, at the end of the presentation, you'll see how budget and finance is tied together.
Okay, yeah, once again, my name is Rhea Price. I'm an assistant director in the Office of Management and Budget. There's 2 assistant directors in budget. And my area of focus is the operating budget. And as I go through here, we'll distinguish between the operating budget and capital budget. So the Office of Management and Budget, we have 3 main functions. The first is budget preparation and analysis. And as I said, my area of specialty is the operating budget. And that's day-to-day expenses, salaries, benefits, and supplies. So like in your own life, you can think of your own operating budget as your expenses like food, rent, utilities, things like that. And then there's the capital budget. And those are long-term investments. And they're things like bridges, roads, buildings. And again, in your own life, if you want to think of your capital budget, if you're looking to buy a house, so your mortgage payment would go to, that's in your capital budget. Another division that we have in OMB is procurement and asset management. And the 2 main areas there are managing the fleet contract, and that's pretty huge. So those are all our vehicles. So those include police cars, emergency vehicles such as ambulances, fire trucks, as well as the garbage trucks and any other vehicles that we own. But we actually contract that out to a private firm, but we do manage that contract. And then inventory and asset control. So it's just keeping track of all those vehicles, all of our equipment, all of our technology. So just making sure we know where everything is, making sure we're replacing them in a timely fashion. And then the third area of OMB, that's grants management. And so our grants officers in OMB, they work with the departments on grant applications and making sure they're complying with the requirements of those specific grants. You've probably heard that the city of Pittsburgh, we've been in what's called Act 47 for a number of years now. So we've been in Act 47 since 2004. And what this means is that we've been designated as a distressed municipality. And there are pros and cons to that, but it helps us manage our finances, and it gives us tools to get the revenues that we need and to keep our expenses down. But we have 2 different state oversight agencies that work with us while we're in Act 47. And those 2 are called the Act 47 and the ICA. Now, Act 47, this is actually like more of a technical team. So they're a team of lawyers and financial managers. And they help us plan for negotiations with employees, our bargaining units. They have tools that they help us with our budget. And we interact with them pretty often. We send them quarterly reports and any other information that they request from us on a regular basis. So we have regular communication with them. And they work with us to prepare a 5-year plan and to make sure that we're on firm financial footing. And I would like to mention that we have been on great financial footing since, ever since I've been here anyway. I know for a fact that the only year since 2005 that we've not ended the year with an operating result was in 2010. And that wasn't necessarily our fault. It's because the ICA withheld some revenue from us. So that brings us to the other oversight agency, which is the Intergovernmental Cooperation Authority. And this consists of representatives that the governor and state legislative leaders choose to be on this committee, or authority, sorry. But they have a lot of power. They're the ones who actually approve or not approve our budget every year. And typically, I mean, there's a little like song and dance that we do every year. And typically, like whenever we submit our first budget in September, they don't usually automatically approve it. They may tentatively approve it, make sure that we fulfill additional requirements, just give them more information. So, and if for whatever reason, if they don't like what we're doing, they can withhold gaming revenue from us. And so that's something that they've done like several years. So, and that's a significant revenue too. That's around $10 million a year. So, and I just want to mention that while we've been in Act 47, the actual Act 47 plan has been amended twice. The first time it was, so we went into Act 47 in 2004. It was amended in 2009, and then the plan was amended again in 2014. Okay, so now I just want to take you through the operating budget process. The city of Pittsburgh, our fiscal year is a calendar year, so we go from January to December. As you know, a lot of other government entities, their fiscal year is typically July through June. So, but we do have a calendar year, January to December. So our annual operating and capital budgets, they both go into effect January 1st. And so right now, this is what like some people might consider like our slow period, but actually it's not right now because we're just getting new budget software, and so there's a lot of other projects that we're working on. But come June, that's whenever the whole budget process starts to heat up. And that's whenever the budget office, we prepare worksheets and some information, and we send them out to all of our departments. And we have analysts that work with individual departments. So we'll start meeting with department directors and their fiscal contacts, and start to go over their expenditures and what they need to get through the next year. So then, so that starts taking place in June, and then in August and September, you know, we continue meeting with them, but then we actually develop their baseline budgets, and so we'll make organizational changes, position changes. So, and then that brings us to September. So as part of being in Act 47, there is a requirement that we submit a budget to Act 47 and ICA 100 days before the beginning of the subsequent fiscal year. So that is around September 22nd, usually every year. So we submit that budget to the ICA, and they review it. And as I said before, they can decide to approve it, not approve it, or approve it contingent on us making certain changes or supplying more information. And that happens in about October and November. And then in mid-November, the mayor actually we might tweak that budget a little bit, nothing major though, because I mean, it's already been approved by the ICA. But then the mayor will formally submit that budget to city council. And then once it's in city council's hands, then they can make changes. And they hold televised hearings, so you can see them interact with the department directors, find out what's going on in all the departments, and how they plan to use their budget for the following year. And then, city council has to submit a balanced budget. They have to approve a budget by December 31st. Okay, now this is an overview of the 5-year plan. Now we are required to not only have a balanced budget for the following year, but for the next 5 years. So this is just a snapshot of our revenues and our expenditures from 2014. Shows how we did in 2014 and what we forecast in budget through 2019. And you'll see that our budget has been around $500 million a year. It will go up significantly to like around $525 million. So so you'll see it separated by revenues and expenditures. And we'll go through the revenues in a little more detail in a second. But so I just want to take you down to the expenditures section. So you'll see that there's a lot of really large amounts here, like debt service, that's $87 million. We have to pay that. There's nothing we can do about that. These were decisions that other people made in the past, and so they're bills that we're stuck with. But if you go down to 2018 and 2019, you'll see that number decreases pretty dramatically. So, and that's what we refer to as the debt cliff. And so once we hit that point in time, we might have a lot more flexibility on how we spend our money. So, and then above that, that's workers' comp. It's typically about $20 million a year. I mean, we do what we can. We have a safety office, so they try to improve the safety around the city. But that's a large expense. I'm sure you all know from your own lives, health insurance, that's a very hefty expense. So that's up there. And then I'm sure you've all heard about our pension and OPEB issues. So that's a pretty steep amount as well. So, and then that operating departments, that's basically all the other operating expense that we have. That includes salaries. Salaries are about $200 million a year. So, and then, so once you take all that out, we really don't have, like, most of our costs are pretty fixed. So, and then once you get down here, you'll see what we refer to as a fund balance. Now that's basically like our savings account, our rainy day fund. And we try to keep it at a certain amount, just in case, some emergency happens sometime in the future that we can get through, pay our bills for, at least a few months. All right. So yeah, like I said, we're going to talk a little bit about revenues. Taxes are, Margaret, she's more of the expert on that than I am. But I'm just going to go down and discuss some of the major revenue sources. So you'll see our revenues, we hope will total around $516 million in 2015. And about a quarter of that is the property tax. So, and that was increased slightly this year. So I think it's 8.06 mils right now. Is that correct? Okay. So, but it was increased a little bit to compensate for, it was after the past county reassessment, the millage was cut way too much, and so we had to correct that last year. So, but that's our biggest source of revenue. And then going down, earned income tax, that's our next biggest source. And so that's the 3% that you pay, that Pittsburgh residents pay. That's what comes out of your paychecks. And 1.25% of that goes to the city, and 1.75 goes to the school district. And then, here's a popular one, the parking tax. Okay, so yeah, $53 million. But about $14 million of that is dedicated to our pension obligations. And then another big one that's intergovernmental, and that includes a variety of sources. Those are payments that we get from the authorities, like the URA, the Parking Authority, but it also includes things like I mentioned, slots revenue and there's the 2% economic. I forget what the entire title is, but so it's a variety of sources. Oh, and this is just a pie chart. It shows every different, all the different revenue sources and what percentage of the entire pie they take up. So we already went through the major ones. So now expenditures. So yeah, where does the money go? I mentioned before that salaries are about $200 million of our budget, of our operating budget, our expenses. Benefits take up approximately a third of our budget. Debt service is around 20%. I might have a black and white copy, so what does that say? Yeah, and everything else is about 10%. So like I said, I mean, our costs are pretty fixed. But I hope you'll be happy to know that police and fire make up the majority of our budget. I mean, they're protecting you, so making sure your neighborhoods are safe. But yeah, the police budget is approximately $80 million. The department, or the Bureau of Fire, their budget is about $60 million. So right there, $140 million. And yeah, in the benefits, that's pension, healthcare, and we all know just from our own lives how rapidly those costs rise every year. And I already mentioned debt service. And in the other category, that's supplies, leases, utility bills. Okay, and now we're going to talk about the capital budget. And like I said, that's the smaller book that I'm sending around right now. And it's not my area of specialty, but so if you have any questions later, forgive me if I can't necessarily answer them, but I will definitely get you an answer. I'll give you my email address, and then you can email your questions to me, and I'll make sure you get your answers. But so this is just a flow chart of the capital budget process, and it's similar to the operating budget process, but it pretty much starts in April. The mayor calls for departmental proposals. We work with the OMB's capital budget office. They'll start to work with the departments for their proposals. And then in June, there's a series of public meetings for input on the budget. And in July, there's actually a panel, and they get together and they review all the project proposals and prioritize them. And then in September, the mayor releases a draft of the capital budget, just like we do with the operating budget. And again, that's submitted to City Council, and City Council, they review, amend, tweak it, and that's passed the same time that the operating budget is passed. So again, yeah, the mayor submits it, and City Council approves it finally. So what is a capital project? There are strict definitions that that go into the capital project. And the capital budget is made up of 3 different areas. So there's capital projects, and the best way to think of these are they're long-term investments. They're things like bridges, buildings, and things like things that improve our physical infrastructure. And they should have a cost threshold of around $50,000 and have a lifespan of at least 5 years. But if it's using bond dollars, it should have a lifespan for the duration of that bond. So if it's a 20-year bond, that capital project should have at least a 20-year lifespan. So, and the different sources of funding for capital projects, those are bonds, and that's basically money that we borrow. So that's bond money. And pay-go money, I didn't call this out whenever we were in the 5-year forecast page, but most years we transfer money from our fund balance to the capital budget, and this is what we call pay-go funds. because they're our funds, and it's pay as you go. And we have more flexibility on how we can spend that money because it's not it's not like there's no lifespan requirements or cost threshold requirements. So there's a little more flexibility that we can use that money for. We usually transfer between well, some years it could be $25 million that we transfer. Other years it could be as low as 5. So, but we try to do that every year. And then the next category is special revenue projects. And these are projects that are funded by public money by outside agencies. And the biggest category of this are CDBG projects, so Community Development Block Grant projects. And we typically get about $13 million a year for those. And then the next category is intergovernmental projects. And these are projects that we fund, and we might undertake it, but it might benefit like another authority, not necessarily the city of Pittsburgh directly. So how do we choose projects? Here's some different requirements that we go through. So projects, if they pose an imminent threat to public or employee safety or health, they receive first priority. They have to achieve compliance with federal and state statutory mandates. They should leverage additional non-city funds. We also measured the impact of the project on the operating budget and potential operational savings. Improve efficiency and effectiveness or service delivery. Ability to improve the quality of life in all city neighborhoods. If the public demonstrates a support for a specific project, then it might receive special consideration. And it must comply with the comprehensive plan. And then this is just a pie chart of the capital budget and where the money goes. So you'll see the over half, over 41 million. Yeah, the capital budget in 2015, it's around $76 million. But over half of that is in engineering and construction. And then after that, there's administration pass-through, neighborhood development, vehicles and equipment, public safety, and facility improvements. And then this just shows you how to read the capital budget. And you'll notice if you look through the capital budget, it's different from the operating budget in that the operating budget, it's divided by departments and bureaus and offices. However, the capital budget, it's more project-based. So you'll see that, for example, on this page, this project is flex beam guide rails. And so it'll have, the title and then the description underneath it and the budget for this year and also the different funding sources because there can be more than one funding source each year for that specific project. So, and then there's a list of deliverables for it, and there's usually a map for each project in the capital budget as well. All right, well, I'm done. I hope I didn't bore you too much. So, and like I said, if you have any questions, my name is Rhea Price, so my email is rhea.price, that's REA.price @pittsburghpa.gov. So feel free to email me any questions, and I will gladly answer them for you.
But before we let her sit down,
Okay.
since we do have 5 minutes before we talk about taxation, do anyone have any questions right now? 'Cause we can
yeah.
get questions now.
Go ahead.
If you were going through that budget process.
Oh, yes,
Oh,
sorry,
this
here.
I'll take
Oh, there's okay, all right.
I'll help.
Oh, thank you, Margaret.
Hi. When we were looking at the annual cycle for creating the next budget. The final step is where City Council approves it. Now, if City Council makes changes to that budget, does that need to go back for approval from that intergovernmental authority again?
Yeah, it does. It doesn't receive as much fanfare as it does after we submit the September one. So, but yeah, I mean, yeah, at all times the ICA has to approve our budget. And if they don't like it, anything about our budget, they can withhold funds. And like I said, that's a significant revenue for us, so we try to comply. Go ahead. Oh, sorry.
Large projects like retrofitting our sewer system, would that have a different sort of process because of its large price tag being in the $1 billion range?
Right, and since that's capital, I can't really answer too much on that. But I would assume that's, you said like something like retrofitting. Would you say, or sewage system? So that would be something more like the PWSA would take on. So not necessarily the city of Pittsburgh. So, but I'm sure that they would borrow money for something like that.
Hi, I was wondering, I'm sorry, if you could give an example of the governmental projects. I did understand what the special revenue and capital projects were, but I wasn't really clear on.
The special revenue, let's see.
No, not the intergovernmental projects.
Are you talking about in capital, in the capital
Yes,
budget?
yes. Can you give me an example?
So, yeah, that may be like some different, maybe like things that we're working on with the URA. So, for whatever reason, like we're responsible for that project, but it may be benefiting the housing authority or the URA, or like it may be taking place in a certain neighborhood, and so yeah, we'll pass the money on to them so that they can do those projects.
One of the projects that might be similar, Rhea, is the TREAD. And that's it's the East Liberty TREAD. And, for those of you who are familiar with East Liberty and all of the development that's going over in that area, where there's so many different entities involved, Port Authority and the city and URA, so that could probably be part of an intergovernmental capital budget. Any other questions?
So I was wondering how that team, the ICA team that approves or not the budget, how it is formed, how many people, who are those people?
Yeah, I don't want to get too much into that because like I don't want like my personal feelings to show or anything like that. But I think there's about like 5 or 6 members. There's one person that's actually paid, okay? There's an executive director of the ICA. They're actually paid. And then there's a board. And the governor appoints members to it, and different legislators appoint members. And so the makeup of the board does change. But they have a website, too. And you can actually, if you want to go, you can go on and see exactly which legislator appointed that particular member. So, yeah, so now that we have a new governor, I think about 2 of the members may be replaced. So we'll see.
And then they work closely with the finance director and the budget director.
The finance director, he's a member ex officio, is that what he's called? Mm-hmm. So, he sits in on the meetings with them, and he's kind of like the person that they go through to get any additional information. But also the budget director, we work with them also, but the finance director is more the formal point of contact.
Okay, since time is of the interest here, we're going to get into some of it. We're going to talk a little bit about taxes, everybody's favorite subject. Okay, and the first tax we're going to talk about, that's our number 1 revenue generator, is real estate tax. And I'm going to have Aaron from my staff come up and speak a little bit about that.
How's everybody doing tonight? My name is Aaron Pickett. I'm a finance administrator. I actually have something in common with you guys. I actually went through the program, the Civic Leadership Program, and completed. So it's actually a great program. So stay in it. I liked it so much that I had to join. But to get into a few of the taxes, these are some city and school real estate taxes. We have a $133 million revenue line. The properties, your properties, everyone's property, is built on a fair market value property, which is determined by the Allegheny County Property Assessment. We receive this information from the county, and then we go forward with our decisions. There's 3 different taxes. We have city and school taxes, and this is how they're how we do the calculation that actually comes up with the taxation. We use the city, and as you know, as mentioned earlier, the millage was increased. It was at 7.5 last year. This year, through legislation, it was bumped up to 8.06. Schools at 9.4 mil. Counties at 4.73 mils. Mills always sound, the numbers always sound so huge, and you're thinking millions. It's actually only 1/10 of a cent, so it's not as big as people think. Again, mentioned here's the city tax is 8.6. This is just an example of the amount that we tax on. School tax is 9.84. County tax is 4.73. And this is one something everyone loves is a discount. If you you get a 2% discount taken if you pay in full by February 28th. So you have to keep that in mind in 2016. This is 2015. And receipts of payment are mailed during the year. You know, if a person has a mortgage, your mortgage company will provide you that information.
And just to add a little bit to that, you know, a lot of people this year said, well, the city raised taxes, What we actually did is we fixed the tax rate and we put the tax rate where it should have been. And I think Rhea explained a little bit. What had happened is a few years ago we experienced a reassessment by Allegheny County. And the city lost revenue because what happened was the assessment went up. And when the assessment goes up and they send us a file, what happens for people who are not familiar with it, we take our millage rate times whatever the assessment is, and that's how we get the tax amount that we bill for. So we bill based on first file that we get from the county that shows this is what the assessments is. This is done in January. We bill, and then come February, March, April, we start getting assessment reductions from the county. Because what happens is you as the owner of a property have a right to file an appeal if you're not satisfied with your property assessment. And because the assessments were so out of line, a lot of people start filing appeals. And what that did is they filed an appeal, they won their appeal, county reduced their assessment. But we had already billed. So then what happened was the adjustments start coming in, and we had to readjust their bill. So we had to start refunding because a lot of people had mortgage companies, and the mortgage companies pay your bill at discount right away. And this is what caused such a drop in revenue for the city. So we're saying, okay, we have to be in line with what the assessments is. We can't raise the millage rate to get a gain because there's anti-windfall where we can't exceed 15% of our revenue that we generated the year before. So it was basically, I mean, everybody say we raised the taxes, but actually we fixed the tax rate to put it to where it should be. And I just wanted to add that to the conversation. Go ahead, Aaron.
Yeah, that's a great point. Thanks, Margaret. And another tax is our Carnegie Library tax, which is a special tax that's billed from the city of Pittsburgh. As Margaret mentioned earlier, we have a voter-approved 0.25 mil, which was from last year. It's equivalent to 25 per year on 100 assessed property. We actually do that on a daily basis as a finance administrator. I'm part of that process, which is it's pretty intense. The property owners with an obligation under $2 will receive a bill. Payments will be made also to our Treasury Department. So if you're unsure where to make payments, all the payments are made downstairs in the first floor. Also they can be made. I mentioned that to us and to Carnegie Library. As you can see, the address is on there. And for more information about how to pay or any information you want to know about about our current millage and the process of that. We actually just went through a process where we uploaded all that information, and also in the booklet you guys received, take a look in there, all that information's in there.
Okay, so that's a little bit about our real estate tax and our Carnegie Library tax, which goes hand in hand. Because I mentioned before, we do bill for the Carnegie Library tax. And those of you who actually see your property tax bill, we have it broken down where we have the city, the school, and the Carnegie Library tax. We have our three taxing bodies. Three taxing bodies is the city, the county, and the school district. This is a special trust fund that what happens is when we have property that's delinquent, we can conduct what we call a treasure sale. And we would put the property up for sale. First of all, the taxes have to be at least 1 year delinquent. Once they go delinquent, we can place that property into a treasure sale, which is actually a judicial sale. But we can only sell it for the city, the school, interest. So, person owes $15,000 taxes. They decide they didn't want to pay it. So the next year, as of January 1st, they're considered delinquent. We said, okay, well, what are we going to do? We're going to put them up for sale so they can pay. We put the property up for sale. What we do is we have to advertise. We have to advertise twice, 2 weeks in a row. Legal advertisement, Pittsburgh Post-Gazette, the Times, the Tribune Review. Then what happens is 10 days before the sale, we have Bob, who's an investigator, and a number of other employees have to go out and post the property. Post a sign on it, your property is scheduled for sale, such and such date. Date comes, it's time for the sale. We still haven't received any information from that owner. Now, during this time and up to the date of the sale, the owner can come in and make payment or payment arrangements. We don't hear anything. Date of the sale takes place. So we're actually sitting at council chambers with a list of properties where we had no contact with the people, and these properties are advertised for sale. The property goes for sale. Sometime we get people come in and buy it, sometime we don't. Because what happens is when you stand up at a treasure sale, you bid for a particular property that's advertised. As I mentioned, you're only buying it for city and school interest only. So if there's a mortgage lien on it, any other liens on it, once you buy that property, you're going to be responsible. So what happens sometime is we have people that do their homework, and they've already researched these lists of properties and know what properties are good properties. We may have 300 properties for sale, but maybe only 5 of them sell. So what happens is we got 295 properties left. So what we do is we have our 3 taxing bodies area that takes a look at all these properties in this list and says, okay, what properties here are worth the reselling? Because a lot of times we have properties that people walk away from. Now, I just gave the year delinquency as example, but the majority of the time it's 5 to 10 years delinquent. So what happens is we make a determination of what properties we actually want to acquire and put the title into the city's name. And that's when they're turned over to what we call our 3 taxing bodies, which is a trust fund that I guess it survives off its sales of property. So what happens is anytime they sell a property, that revenue goes into that trust fund to pay the salaries, to pay for the boarding of properties. So all functions of 3 taxing bodies. Now there's a property that we acquired, and before we acquire it via treasure sale, but there's actually a 90-day redemption period. The owner can come back and redeem their property. That's the law. Okay, 90 days are up, we don't hear anything. At that point in time, we make a decision, okay, these are properties we want. We have to have all our service to show that we had due process. We send all that information to the law department along with the list and say, these are the properties that we want to acquire. And over the years, through different administrations, it was acquire everything, acquire this, acquire that. And a lot, like I said, a lot of stuff that we do have is not worth even talking about. But this is how we accumulated this mass inventory over the years. So what happens is these properties go into the inventory of 3 taxing bodies. They're listed on the website, properties that are worth selling. We have lots, a lot of lots. That's how we developed our side yard program that a lot of people maybe have heard of. And we have these properties that we sell. And once you decide that you're interested in something, you contact our real estate, our 3 taxing body sales department on the first floor. And what we do is have you sign a request to purchase, and we start the process. But it's part of real estate because our real estate area is responsible for the billing and collection of those taxes. But once we bill and we don't collect and we put it in a treasurer cell, then we turn it over to 3 taxing bodies. So I just wanted to give you a little bit of idea of how that works. And next, we have Bob Zilt's going to come up and talk a little bit about our self-assessed tax areas. Real estate, as long as you got a home and you're living in it, you're going to have to pay taxes on it. But self-assessed taxes are a little different, and I'll let Bob go through some of the taxes.
Thank you, Margaret.
And we have like 10 minutes.
Yeah, okay. Hi, I'm Bob Zilch, a tax investigator for the city, and I work in collections and compliance for the city. What we try to do is we try to collect the taxes, see to it that people are in compliance with the various laws that are in place, such as paying for the parking tax for the operators, your earned income tax, which is the wage tax, all the various taxes that would be out there, amusement tax. We try to make sure that all the various entities in the city are all staying on top of paying their taxes. We want to have full collection if we can. Obviously, you'll never have full collection, but the goal is to have full collection. All right, probably our biggest tax that really we don't handle anymore as the city, but you still pay it, is the earned income tax. That's the 3% wage tax, commonly referred to as wage tax. It also comes through in the form of a net profit tax if you're self-employed, because it's replacing the wage tax, basically. And that's only applicable to residents of the city of Pittsburgh. Residents pay 1% of that 3% to the city itself, and 2% of that goes to the school district. We have a separation of money there. Now, the revenue sharing, which is another part of this process, is 1.25% goes to the city and 1.75 to the school district. And I believe that's part of the reason behind that is because Mount Oliver's involved with this also. All right, the deadline for that is April 15th, just like your federal taxes. And you'll just have to go through a Jordan tax service now to set up your account and get that going. Because we don't handle it anymore. You used to be able to call the city, but now you have to set it up through them, and we don't handle any of that at all.
And that's what I just wanted to clarify a little bit. Years ago, what happened is the state enacted what they call Act 32. And what that did is that changed the way that the earned income tax is collected. And, previous years, the city always had their little tax booklet, the PGH 40, that we mailed out. People filled out their tax returns and sent them in. But now, a lot of you that live in the city and work in the city are probably receiving your tax form from Jordan Tax Service. And what happened is, the state decided, we're going to have different tax collecting districts. And we're going to have a tax collector for each district. So what they did is they put the city, the school, and Mount Oliver under one tax district, which is called the Central Tax Collection District. And at that point in time, when they enacted this law and made this district, there was going to be one collector. And what happened is the city, we were already collecting, but we had to submit a proposal to be the collector for that district. Jordan Tax Collector, Berkheimer, Keystone. There was a number of collectors that put in the bid to do this collecting of this earned income because, as you see, besides real estate, it's one of the number one, revenue generators. But to make a long story short, our bid wasn't good. We didn't get the bid, and now Jordan Tax Collection is collecting the earned income, which they'll be collecting till 2 more years before the contract runs out, and then the bid will start over again. But it's working out better because one of the things is that if you live in the city, you got to pay city taxes. But before, they were depending on the employer to separate those taxes and send it to where it's supposed to go. Now, Jordan Tax collects all that money, and they've been in the business of doing that, and they are doing a lot better job. I think a lot of it was to our I&T department, in our system, and you have people out there that does nothing but collect. And I think the city is pretty satisfied with the amount of revenue because they're bringing in a lot of more revenue than we were actually bringing in ourselves. We weren't doing a bad job, but I think it's the way that they changed it being collected made a difference also. So I just wanted to give you a little overview on how that's done now.
Yes. Okay, now I'm going to go into some of the various taxes that we have for the self-assessed taxes. We have the earned income tax, which we just explained, the 3% wage tax, and the net profit tax. You also have a local service tax. That tax is the one that everybody knows is a $52 a year tax. It's taken out of your pay as you're paid. If it's once a month, if it's once every week, if it's once every 2 weeks, whatever way you're paid, it's taken out in increments that are equal, and that'll be up to $52 a year. You will only be responsible for that tax if you make over $12,000 a year. So you will not pay it. There's a lot of people, they'll start getting it collected from their pay and they'll move away, or they will get laid off, or something will happen, or they're a college student. And now they'll have to seek a refund from us if they don't hit the $12,000 level. So you always have to hit the $12,000 level in order to be responsible for that $52 tax. Also, people that are self-employed, if they make over $12,000, since they're self-employed, they don't have an employer withholding the tax, they also have to pay that too. So nobody's exempt from that. And even if you're working in the city, say you're an attorney from Mount Lebanon, if you're making $12,000 a year in the city, you should be paying that $52 to the city. Okay, we're going to go to the payroll expense tax. That's one of our bigger taxes for businesses. That's assessed to the business itself. It's a little over 0.5%, 0.0055 to be exact. That is based on the payroll of the work that's being done in the city. So when you have, say, like a U.S. Steel, their main office is in Pittsburgh. All their employees that are in Pittsburgh, working in Pittsburgh on behalf of U.S. Steel, that payroll gets assessed 0.0055, a little over 0.5%, just for their payroll. Small businesses, they're subject to that tax also. Any type of business at all has to pay that tax. If you would be self-employed, you may only make a few dollars. It won't really be a whole lot of money, but it still is necessary to pay that tax. All right, let's go to the amusement tax. The amusement tax is 5% tax. We use a factor whenever you're paying that tax. It's 0.04762 times your gross. That would be applicable to, say, a cover charge on a bar. You get a $10 cover charge on a bar. Every person is coming through there. They have to keep tabulations of that. They're supposed to submit that to us. Arenas, clubs, any of the arena type stuff that's going on, clubs that are having functions, they're all subject to that 5% amusement tax. They have to forward that to us. We, as investigators, we check for compliance. We do spot checks. We'll go to the bar. We'll count how many people are going in the bar. Say, okay, did 200 people tonight. Then we look at their report for the following month, see if it calculates out to be close or hopefully exact. And we check on that too. We do spot checks on the parking lots also, like this. Next, the parking tax, going into the parking tax. The parking tax is 37.5%. That is for commercial parking operations. If you have a parking operation that is residential, strictly residential, they would not be subject to that tax if they were charging it for even in rent. They'd charge you $60 for parking. That wouldn't be subject to taxation. Say like the restaurants like on Grandview Avenue, you have a guy grabbing your car, valet. He's taking it from that, it's strictly servicing that particular restaurant. They're taking the car to a lot that's only used for that restaurant. It's all for one use. Hillman Cancer Center, you go there, it's strictly a Hillman Cancer Center. You're a customer, patient, you're going there, no other public parking involved. That's not taxable. But all these other open lots that you come to and park, they're subject to this taxation. The arena parking lots, places like that. Heinz Field, they're subject to these parking taxes. The ISP, the Institutional and Service Privilege Tax. That's primarily for the nonprofit groups of people that are doing business in the city. When they sell goods, they hold different sales. They have a gift shop, things like that. That will be considered a for-profit. That would be subject to taxation. They have a $20,000 exclusion. So the first $20,000 they do not pay anything on. Anything above that, they pay 6 mils. And if they have,
PMC's not a for-profit, they're a nonprofit.
they're a nonprofit, yes.
They say.
But if they have a gift shop and they're operating it as profitable, they have to pay, just like everybody else. That's the way it is. That's a little bit, you know, you have to know what they're doing exactly with the money. I run into this well a lot of times. They'll still ask me, why do I have to do this? Or why do I have to pay it? And a lot of times what it is the money that they're taking in will go right back into a nonprofit situation. So it's probably not applicable for taxation, but it's a case-by-case basis a lot of times. So that's a real tricky one, and I'd have to see what your whole situation is in order to say whether it's taxable or not. All right, now we got the deed transfer tax, and that's a generator of money, and Aaron would be the specialist on something like that more so than myself. But it really just boils down to you sell your house, you owe 3%, 2% goes to the city, 1% goes to the school. That's for you selling your home. So you sell your home, and it's a $100,000 home. You're going to pay $3,000 deed transfer tax.
As long as it's an arm's length
And
transaction.
if it's an arm's length transaction, yes.
Which means is you're not transferring the property to your sister, your mother, or your father, or something like that. Then anybody else, if I had property and I'm selling it to Bob, I would be subject to that transfer tax.
Now, there are people that will do other things to get around it. That's well known. They have what was called an 8911 sale, where you would sell just a percentage of the interest in a property, not the whole property, say like a U.S. Steel building, for example. I hate to keep picking on them, but it just stands out. And what they did was they bought the stock in the corporation, and they didn't really buy the building, technically. So they avoided the tax being able to do that. And what we're trying to do in city government here is we're trying to tighten that up a little bit so that we can get more of that revenue that we should be getting, because everybody else is really, they're paying it. The average citizen doesn't get around it. And we're trying to tighten that down a little bit in order to get that extra revenue. Okay.
Next slide is just briefly going over the earnings.
Okay. Great. All right. Just the earned income. Okay, the earned income tax, it's called the wage tax. Let's go back over this again. It's a $70 million revenue line item. Taxes only apply to people who earn income or net profits and are city residents. We want to assure you that we know who's who. The residents pay 1% to the city, 2% to the school district, and as I said before, the revenue sharing, 1.25 to the city, 1.75 to the school district. And the due date's just like the federal government and the state, and that is April 15th. If anybody has any questions, I'll be more than glad to try to answer them for you.
Thank you, Bob. I just wanted you to go over that one more time because, you know, earned income is a big wage earner for us and a big revenue. Rhea, and we're going to take questions after this. We have about 5 minutes before you take your break. But Rhea, you want to go to the next slide? And this is just an example of how much your taxes would be. If you had a household income of $25,000, then we showed, you know, your earned income would be $750, and this is the split of the money of how the city would get $313, the school district would get $438. But you all have a copy of this in your handout, and then we tried to give you an idea on property taxes. If your assessment is $50,000, this is what your property tax would be. Shows the city breakdown, the school breakdown. County, we just threw that in. We don't collect from the county, but we just wanted to give everybody an idea what you would pay, and then the library tax. So with that said, we're going to take a few questions before we have a little break. Yes. Wait, 1 minute.
I just wanted to know that when you do your investigation on organizations, is there some kind of a trigger that goes off for you to have to investigate an organization or a business? What causes you to have to go out for the amusement tax?
Well, it would depend on the situation. A lot of times what will happen is it's just non-compliance, non-payment.
Oh, okay.
That gets the ball rolling. Or if somebody has a business and I look them up and I look into them and they aren't registered at all. Now I got to start the process and look into them. Or if I would check a parking lot and the cars don't match up with what I actually count. They say there's 50 cars in there, I count 100, something's wrong. We got to start looking into it. So there's various reasons for that.
See, a lot of times what happens also is when people get permits to park, the information they get from the city actually tells you how many parking spaces is on that lot. So if you're going to go and you get a permit to parking from, what's it called, license and permits and the department now, what happens is your permit will say, okay, this is for a 50-space parking lot. But then Bob goes out and he's doing his little work and he see, 75 cars. Wait a minute here. So that opens up his eyes and say, okay, we need to check this out. And then if something that we have on record doesn't match what we're seeing and so forth, that's when Bob and the other investigators turn it over to our auditors. Say, hey, I think you need to pull this account up and we need to call them in and let them bring in some of their records and we need to find out what's going on. Questions?
Hi. Yeah, I had no idea there were all these taxes. Is it, I mean, it's okay, and I think the parking tax is great. But are some of them, were they designed so that, I assume there's no double taxation? So were some of these trying to catch loopholes?
They're actually what I would like to call them is different markets. It's the best way to describe it. You know, a parking operator is a market. He's only worried about parking tax. Because he has to pay the wage tax or whatever anyways, no matter what business he's in. And a lot of these other taxes, if it doesn't matter what business he'd be in, he would have to pay the payroll expense tax. But the parking tax is specific to his market. The amusement tax is specific to that market.
I was just wondering if out of all the revenue sources, if your office has identified any that, there's room for improvement. Obviously, tax collection's never 100%, but if there's anywhere there's significant room for improvement or where you're focusing your compliance efforts.
Well, we begin to rev up our collection focus because, more and more, when we do a billing each year, we can tell, you know, from past years how many more people are going delinquent. And, I mean, the city needs money, so we're moving more toward an accounts receivable department, which we don't have. And because we just have a division, it's called the real estate division, and we do the billing, we answer phone calls, someone calls in, the same person that calls in to talk about, you didn't get your bill, maybe the same person that says, well, I said, I need a payment plan, and may put you on a payment plan. So we need, I think if we gear up more of to have an accounts receivable department when the taxes go delinquent, because rightfully, your taxes are billed in January. You can pay the whole year or you can pay installments. But come March 1st, your taxes are considered delinquent. Now, legally, as far as filing a lien or anything, we can't do anything until that tax becomes at least 1 year delinquent. But it's actually, the due date is by the end of February. So if you don't pay by the end of February, by March 1st, you're considered delinquent. So I think if we focus more on trying to do some calling and sending out more notices and telling people, hey, look, you're delinquent, you need to pay this before the lien is filed. And actually, Jordan is also collecting our delinquent real estate taxes. So at the end of the year, December 31st cutoff, come January 1st, we're preparing a delinquent file to send over to Jordan to collect the delinquent real estate taxes. So I hope that helps. But the tax relief programs, you know, our tax basis is high for real estate taxes, but there are programs out there to assist the elderly, which we call the senior tax program. And then we also have the Homestead Act 50. And everyone who owns a house in the city of Pittsburgh qualifies for this homestead. And I'm not sure that a lot of people knew that, but as long as you live in the property and it's your primary residence, you receive a reduction off of your property taxes every year. There's more information on our website, and there's also information in this booklet I handed out. And also on page 8 and 9, it lists all the abatement programs that we have. Someone comes into the city and they build a new home, they get a 3-year tax abatement relief from taxes. So for those who are interested, page 8 and 9 will give you a rundown of all the different tax abatement programs that we have. And with that said, if there's not any more questions, then I'm going to turn it over to Sally. I thank everyone for your cooperation and your questions.
And right there, if you want to reach our websites, those are the URLs, the Finance Department and the Office of Management and Budget. Just wanted to point that out.
Okay, thank you.